Hey everyone, welcome. How's it going? Hi C Fazio, hi Spider Monkey, hi Stefan. Hope you guys had a great day and a great weekend. In case you guys are not on my Telegram already, you can join that with thetradingpub.com/Kane. And just as a reminder, there are people out there who are impersonating me, who are using AI with my likeness, with my voice to try to convince people to transfer them money or cryptocurrencies, claiming that I'm going to trade their money for them, and that's not the case. Okay, so I don't trade anyone else's money. Last Friday, I think I had a slip of the tongue, and a couple people messaged me about it, and they asked, "Oh, okay, do you manage other people's money?" The answer is no. I only manage my own money and my family's money, and that is it. So I did have a slip of the tongue when I showed you a part of an account, and I was like, "Oh, that's someone else's account." Well, that's my family's account. So don't get confused by that. I don't manage anyone else's money. So if you receive any communication from anyone claiming that they'll manage their money for you, or I'm going to manage your money for you, it's not the case. It's a scam. Okay? So just be aware of that. And regarding Telegram message on neutral 0 DTE, would you mind giving an example? Yeah, no problem. We'll do that right now. So speaking of the Telegram channel, what we commented today was, that's the wrong group, right here. So this morning I said, well, it looks like it's directionless, typical for a Monday, and the SPY gamma was split across many, many strikes, and same with the SPX. And if we look at the peaks of where they are, the SPX was about 64.20 and then 64.75. So, and the bulk of that gamma exposure was in between those two. And then there's a little bit outside of that, but not really all that much. And over here, we said 643, 647. And again, there is more out here on the tails, but I felt that given it was Monday and the range that we saw on the SPX, that 643 and 647 was the better range. So how would you play that? So I'll show you exactly how I did play it, and then we can talk about other ways that we might do it. So neutral, I said focus on neutral on 0 DTE. And unfortunately, what I didn't give you was the XSP. XSP is the mini index. So basically SPX roughly divided by 10 would give you the XSP. And it was a very similar picture as the SPY. It was 643 to 647. Okay, so you're just gonna have to trust me on that because unfortunately it's not in my habit to give people XSP levels. Maybe I'll start doing it if people are interested. So I'll show you exactly how I traded that. I traded it two different ways, actually. So we've got, oh man, they went away. I guess because they already expired, Option Strat already got rid of them. Gosh, okay, so let me show you, see how else I can show you. Let's do it this way. So it's just going to be hard to analyze. Maybe I can use the Analyze tool over here. So let's go over here, let's go to XSP, let's go to the first account. First way that I did it was with an XSP iron condor. Now remember what I said the levels were. I said they were 643 and 647. I decided to give myself a little bit of wiggle room, and instead of going 643 to 647, I went 643 to 648. And that iron condor gave me a 16-cent credit. I was going for a little bit more. I was trying to get 17, but just to get it done, I went for 16. And where did we end on XSP today? XSP landed, I think there was a sell-off right at the end. So you see that, so we were holding pretty well over here until the very last couple minutes. We sold off quite sharply. So over here, XSP, okay, so it was looking beautiful until the last 5 minutes at 645 would have been basically right in the middle. but we ended it at 643.93, which is fine because an iron condor gives the exact same return. Can I do it this way? Yeah. Okay. So right here, okay. So as long as XSP stayed between 643 and 648, I would have kept the entire 16 cents. And if it went out below 642 or above 648, I would have had to pay 84 cents. Okay. So since we ended at 643.93, then that's within the 643 to 648 range. And then I ended up getting to keep the entire 16 cents. So what's that return? That is 16 cents on 84 cents of risk. So my return on risk was 19.04%. We'll just call it 19% on this particular trade. Now it's not bad. So from roughly, I think it was an hour after the market opened, 23 minutes after the market opened until the end of the day, I was able to make 19% on my money. Why? Because it stayed within my range, and we felt that based on the gamma that it would stay within 643 and 640. So I gave myself, like I said, a little extra wiggle room, right? On both sides. Well, on at least on this side. I thought I gave myself on both sides, but looks like I only gave it on the upper side. So that was one way to capture that neutral movement, that chop sideways. I don't know exactly where in between 643 and 647, because the gamma levels, right, there was nothing particularly exciting about any one strike. So my best guess is some range in between the two, right? Now, that's way number one. Hi, Peter. Number two was this one, where we did a butterfly, very similar concept, except instead of the, what am I trying to say? Instead of the having a wide range where I make the exact same profit, I make more profit the more central to my spread. So what's halfway in between 643 and 647? It's 645. So what we do here for the butterfly is we sell a call at 645 and sell a put at 645, the same center point. And then I buy protection further out, in this case 50 and 40. Why did I pick 50 and 40? Because those were the 2 points that gave me break evens that are roughly 643 and 647. It's actually not quite, but you can see that my break even over here was 643 and call it 25 cents. And my break even over here was 646 and call it 75 cents. So within 25 cents of the points where I felt that the market would stay inside of. Now, if we landed right at 645, I would have made the most amount of money, and then I would break even towards those two break even points. So make less and less money the further away we go. Now, remember what we saw in this right here. In the last 5 minutes, we were right there, very close to 645. We're at 644.80, 644.90. I stood to make probably about $150 roughly on this trade. And then we traded all the way down in the last few minutes, 4 minutes. We traded all the way down to 643.93. And so what that ended up being right here, 643.93, you can see that I made $65, roughly $65. 64.98, just basically 65. Can I get it exact? 64.98, okay? The maximum I could have made was That's not right. It's the credit that I collected, which was $1.75. So it looked very much like I was get very close to that $1.75, but I ended up with 65, yeah. So that's not bad. My max risk here was $3.25. How do I know that? It's because this distance between the strikes. So it's 5 on the put side, 5 on the call side. We made a nice even butterfly. So 5 minus what I collected in credit, $3 or $1.75, that gives me $3.25. That's my maximum risk. So if I happen to make $1.50, where instead of the last 4 minutes where it rapidly dropped off, then I could have made $1.50 off of 325, which would have been 46 cents, 46%, which is not bad at all. I ended up making 65 off of 325, and so I made 20%. So in this case, the butterfly made about 20%, and the iron condor made 19%. So they performed almost the exact same. But if we didn't have that sharp sell-off at the very end, the butterfly would have done a lot better. So if you can pin an exact strike or exact level, then your butterfly will perform a lot better. And then the iron condor is like, oh, I really have no idea where it's going to be. And actually, I didn't really have a great idea of where it was going to be. But on average, the butterfly, well, if I trade a butterfly every day and I tried a iron condor every day, on average, I'm going to perform much better on the butterfly because it's only on these tail ends where the butterfly doesn't perform as well as the iron condor. And then over here in the middle, then it outperforms. And then if you look at the reward to risk, if you land somewhere in the middle, it's much better than on the iron condor. So if I trade a whole bunch of them, just say I trade them every single day for a month, then the butterflies on average will start to outperform the iron condors. So those are two ways that we can capture the neutrality of the market. Hi, Kay. Love getting your gamma levels in the market. Great. Hopefully they helped today. We were just going over how I took the gamma levels and traded them 0DT today. All right. So did that answer your question, Maria? Does that make sense? How I capture neutral trades? Okay, so our gamma levels were good today. They were very, very helpful if you wanted to trade that. And then let's take a look at the overall market. So SPY, basically, we know the story. It basically chopped nowhere all day until the last minute. It kind of went down, but it didn't really move down that much. You see this crazy, it just really broke that box right at the very end of the day. Where's my drawing tool? Okay. So it really broke this box just right at the very end of the day. Okay. And it just broke down. So that shows a little bit of weakness. And what can we expect tomorrow? Today felt like a bloodbath, but it was such a low volume day that the swings are extra. Okay, so why did it feel like a bloodbath for you, Stefan? Because it really was just a choppy day. If we look at the SPY, it's down 0.44%. So that's normal. So if we look at these days, so this day was actually down more at 0.54, 0.27, 0.4. So this is just a normal retracement so far. It didn't even hit the EMA 8. So last week, when we were talking about the markets, we said, oh, okay, we're probably not going to get too much movement because the major catalyst was at the very end of the week with Jackson Hole. And Jackson Hole saw us bid way up. That's a very large bar. And the problem that we saw with Jackson Hole was that it was not able to break above the previous all-time highs. All we did was match it. So it looked like a bunch of momentum came in. However, it was also, if we looked at the the way that it traded, basically all of it came right at the very beginning, right before Powell started speaking, and then a little bit more after he started speaking. But after that, it did not continue. And that was a reflection of what I talked about on Friday, was that, hey, there's no more catalysts left. There's no real strong catalysts in the next week that we can see that the market can get excited about and move upwards, except for potentially corporate earnings. For example, NVIDIA is going to be very important to watch. NVIDIA, I don't know, I think it's tomorrow morning, actually. We'll take a look in just a moment. But absent corporate earnings, you're probably not going to get a big catalyst in this market. And the largest one that we could identify for this week was PCE. And PCE operates on inflation, but it's pretty much already a foregone conclusion that the Fed is going to lower rates on September 17th. And then we are pretty confident in this market that we're going to get 3 rate cuts, at least 2, but maybe 3 rate cuts in this market. So basically, at this point in time, all PCE can do is reinforce what the market already thinks. And it can't really do too much to negate what the market really thinks. So either the market will say, oh yeah, it's exactly what we thought, in which case that's not a great reason to go higher. It's just like, oh, we're priced. We got the pricing right. If we negate, then that's an excuse to go down, or that's a stimulus to go down. But again, even if the inflation data comes in higher, at this point, it's got to be really high for the market to say, oh, they might actually think twice about cutting rates in September. So at this point, it's very unlikely, especially after what Powell said during the Jackson Hole meeting. He basically said, yeah, it's appropriate for us to reevaluate our policy based on what we see in the market right now. So unless that data point is just so extreme, it changes their analysis, then we can't really expect that they're not going to cut rates in September. Okay, so we pretty much know what's going to happen. So that PCE is not going to be a huge stimulus. So what do I expect for the rest of the week and tomorrow? Absent the effect of corporate earnings, then what I expect is, look, this was a very large bar. It's the biggest bar that we've seen in quite some time. It's probably similar to this bar right here. Okay, these are all smaller, although kind of sort of the same size, but this is definitely bigger. And then this, if I do high to low, is similar, but still smaller. So the most comparable one is this one right here. And it did not get us above all-time highs. And all of this surge happened immediately before and shortly after the Jackson Hole speech, and the rest of the day did nothing. So that is a sign of not huge amount of enthusiasm. The other thing that happened on Friday was that SMH, yeah, went up, but like we're nowhere near the all-time highs. MAGs, it went up, but again, not even close to that all-time high. And then we looked at QQQ, same thing. And then what we saw in the SPY is that we matched or get very close to that all-time high, but take a look at RSP. RSP actually made that all-time high. And so what we're seeing is breadth into the markets. But if we look at the sectors, if I go to StockFetcher and I look at my sectors, then what we see is that we might see something slightly different right now, but what we actually know, if I go back for Friday, what we see is like we've got defense, we've got semiconductors, gold, tech, utilities. It's just a random mix of sectors. And if I go to today, then I've got defense, gold, SMH, XLK, MAGs. Okay, at least these are stacked. But then I randomly have industrials before we get to communications. Then I got utilities right here and home builders. So it is not as mixed up as on Friday, but it is still very mixed up. So that is going to make it more difficult for us to go higher. Basically, what we're saying is we don't have a lot of momentum. We don't have a lot of excuses for the market to go higher right now. So if you remember on Friday, the analysis was, yeah, we could maybe float higher, but we're probably going to experience some chop. And that's what I expect for tomorrow, or for the rest of the week, I should say, is most likely chop unless something amazing happens in some of these corporate earnings. And for tomorrow, because we already hit that all-time high right here, and this is a fairly large bar, we have an inside day today, and I have no reason to believe that we won't have an inside day tomorrow. So that could mean that we could come down and touch that EMA 8 over here, but mostly a chop sideways. That wouldn't be a huge move downwards also. So if you felt that today was difficult, a lot of stocks were minus 1.5% or higher. Yeah. So what you're seeing is that pullback. So because mags did go higher, right? Mags went a little bit higher, 0.5%. So there, for the SPY to actually end up lower, then that means a lot of stocks outside of the mags are actually lower, and that's probably why you're feeling that pain. It's because we're in a sideways market right now. We're not in a bull, like a heavily. Well, if we're leaning anywhere, we are leaning bullish, but right now at this very moment, it's just chop. So if you're in chop, then you want to make sure you don't get wiped out. Like, if you set your stop loss, you're getting wiped out just because of a random movement downwards. So if you have an example of some of the stocks that you're looking at, Stefan, that went down around a 1.5%, I'll be happy to look at it. The other thing that you want to look at is what's their ATR, right? So for the stock that went down 1.5%, what was that in terms of their ATR? Because it might have just been a very normal movement. Or maybe that sector was actually is performing very weakly. The SP 500 map was very red. Yeah, like I said, that's not surprising because of what I said. Those mags were up. So for the S&P to be down, even though it's down slightly, a lot of the other stocks had to be red. Let's take a look at FinViz, see if I could get a map. Okay, yeah, there's red, definitely red here, but if you look at the total volume of green, so if we account not the number of stocks, but the size, the area on this chart, I would say it's pretty close to 50-50. I wouldn't say that there is more red on the screen than there is green. But certainly if I counted the number of stocks that are red versus the number of stocks that are green, then yeah, there'd be more reds. Uber. Let's take a look. When NVIDIA is Wednesday after close. Thank you. Okay, so yeah, let's take a quick look at Uber. Uber has it's seeing volatility. It has very large bars. It has huge wicks and huge candles. So this is a volatile stock right now. And what did it do? It just went down. It didn't even come close to, it's maybe like halfway down to its EMA 8. So this isn't even a full pullback. So it can definitely come down a little bit lower. I would call this very normal action. I wouldn't call this, it's down 1.63, $1.63 from Friday. And its ATR, including today's movement, is $2.79. So on Friday, okay, so on Friday, that ATR was 2.83. So basically the same, 2.83 versus 2.79, not a big deal. So Uber only went down $1.63 versus its ATR of 2.79. That's completely random movement. So there's nothing to say. So this down to here, that was down 1.59. So knowing that, look at the next 3 days. Should you be concerned about Uber? My answer is no, right? If I rewind this and say, hey, look, we went up, we pulled back, we touched the EMA 20, we traded all the way back here. We have some distance between the EMA 8. The next day, it could come down and actually touch the EMA and then bounce, or maybe this was the bounce. Either way, should I be concerned about Uber at this point in time? My answer is no. Right? This was down 1.53. The ATR at that time was probably pretty similar. That's just normal random movement downwards in the greater upward trend in Uber at the moment. And then we have that gamma pocket at 100. I think, did you get this idea from me, from the gamma pocket? Because I was in Uber also. I traded out of it right before Jackson Hole, actually. And then right there, we see that, okay, this is basically sideways movement. It is up 50 cents, but 50 cents on a $2.78 ATR is kind of random movement. It's just random movement. Then the next day, we go way up higher. That's Friday, Jackson Hole. It did go a lot higher. And so this was nothing to be concerned about. And then today, we go and we come back down a little bit towards the EMA 8, but again, it is random. It's less than 1 ATR. It's a normal movement back. So if we see the volatility inside of Uber and the size of its wicks, then we understand that this is normal movement for Uber. This is not a cause for concern. The trend is still in place. It's still above the EMA 8. There's nothing to be concerned about. We just have to be patient because with the volatility of this, it's very easily swing back tomorrow or within the next 2 to 3 days. And that 100 is, let me just check real fast if that gamma pocket is still there. Hard. If it's hard not to panic on Uber, then you probably traded too large of size. Yeah, that gamma pocket's still there. Okay, so this is normal movement. And look, we had got this supporting gamma pocket at 95, and we closed at 95.26 today. So this is basically what happened in. Let me change this axis. Okay, Friday. And then today, it traded back down very close to this supporting gamma pocket. That's great. It's just pop up, pull back to support. This is a normal breakout. Breakout, pull back to support, bounce back up to the target. This is perfect. This is beautiful. This is actually, I would consider entering Uber tomorrow morning on a bounce off of 95. I might even issue that to my Gamma Pocket members. This is beautiful. I like that a lot. Yeah. So if you're finding it difficult not to panic because of this move down to 95, then that's an indication that you probably traded too large of a size. Right? So that $1.63 or move downward. Why can't I get? It just represented too much money in terms of your account. So really, that 1.63% move may be exacerbated if you were in an option, then you might multiply that by 10 or 20. So a 10 or 20% move downward inside your single position represented too large of a portfolio, which is probably why. Oh, I'm just guessing. Okay, that's usually the problem that people have when they are concerned about a normal movement downwards, is that they've overallocated themselves and it hurt their portfolio too much. That's normally what people are concerned about. Okay. No, I didn't post Uber in Gamma Pockets. I believe I showed it to you guys in the post market either Wednesday or Thursday. I believe. I could be wrong. No. You're just a baby. Okay. All right. Yeah. Then if it's a small amount of money, there's nothing to panic about. Yeah. So you'll just have to learn that emotional management that comes with trading. You recognize what is normal, what is not normal. So, for example, if if I sneeze, am I going to panic? I'm like, oh my God, I'm sick. Oh my God, I might have COVID. Well, if I never sneeze and I never sneeze unless I get the flu or I get really sick, then if I sneeze, maybe I'm going to freak out a little bit. But if I sneeze every day, I have allergies and I sneeze, 5 times, 10 times in a day, then the next time I sneeze, I'm not going to panic about it, right? So if sneezing is a normal event, then you're going to be like, you're not even going to think about it. But if sneezing is a very abnormal event, then you're going to freak out a little bit. So if I have a fever today, well, I never have a fever unless I'm sick. So if I have a fever today, then I'm like, oh my God, I'm getting sick. But if you get fevers every single day for some reason, or maybe a heat stroke every single day for some reason, then if your temperature is elevated, you're going to be like, it's just another day. Okay. So this ATR is your gauge of, is it just another day, or is it something that I should be concerned about? And that's either to the upside or to the downside. If it's up to the upside, just say it went up 3 ATRs today, you'd be like, whoa, that's really crazy. Maybe I need to take some action here. Maybe I better take some profit here before this thing crashes back down, right? It's like, it's a warning sign. Oh my God, I might need to take some action here. Whereas if it's just like this, I'm in a nice trend and I go less than 1 ATR, less than 1 ATR, less than 1 ATR, then I'm just going to keep on riding that trend. I'm going to keep on riding that trend. I wish I had an example of something that went parabolic today. Let's see. Bar charts, top gainers. Top gainers, price volume leaders. Okay, so let's take a look at INHD. Okay. This is an abnormal event. This is an abnormal event. Right? So right here, yesterday, my ATR, or Friday, my ATR was 8 cents. And today we went up $3.44. Okay. So that is about 40 to 50 times my normal ATR. Right. So this tells me something. It's like, look, something happened here. I better pay attention. So on all of these days, a few cents, normal. Very abnormal. Oh, I should really consider doing something. For example, taking profits right here, or buying a put to protect my profits, or putting in a trailing stop loss to protect my profit. I should do something because an abnormal event happened. Just like if I have a fever, I should probably do something, not just la-di-da, forget, pretend nothing's there and just work and eat and sleep as normal. I probably shouldn't do that, right? So this is your indicator right here as to if something abnormal or normal is happening inside this particular stock that you're looking at. Okay, OPAD went nuts also. Yeah, same thing here. 59 cent, like the previous day, it was probably much lower. Right, Thursday, Wednesday, Tuesday. Why is this so difficult? Friday, 28 cent ATR. Okay, and today it moved $3.64. So probably about 12 times normal. I should probably take action, right? So over here, when it moved 12 times normal, that doesn't mean sell, right? This is above 1 ATR move also. This one probably was also. It just means be careful. I should start making a plan. Maybe that plan is take profit, or somehow protect my profit because maybe I'm going for a big ride, but I need to start paying attention when that volatility spikes up like that. Because a big move up is usually followed by a big move down, right? It's very rare that it'll move up and then sustain. And the other way around too. A big move down, it is more common for a big move down to be followed by a sustained move downwards than it is for an upward move to be sustained. But still, if it's a huge move down at some point, you expect it to consolidate or recover. Okay, really good insight. Good, Stefan. I'm glad that was helpful. Okay, so SPY, we already went over. It's probably expect more sideways chop. It could float a little further downwards, but to me, for us, for our discussion purposes, this is sideways chop. Okay, anything in this box is sideways chop. So we've been sideways chopping for quite some time. And so if we break out of the box, that is a positive bullish sign. But for now, not really looking like we got much that could do that. If NVIDIA just kills it on earnings, if the reaction is super positive, then yeah, that could be a catalyst. Let's see what else is reporting this week. Did that filter already? This week. Okay, market cap. NVIDIA, BABA, PDD. Those are both China stocks. CrowdStrike, Dell, so some tech. We've got some tech going on. We've got some random banks going on. Marvell, semiconductors. Yeah, a lot of, I can't say a lot of tech, but a few fairly important tech stocks. So that will tell us a lot. And then did I just see at the bottom of the list? Yeah, DG. Okay, DG will help with retail, especially discount retail. Walmart, I think, didn't do so hot. Investors didn't like what happened with Walmart. So it'll be interesting to see Dollar General as well. And then tech is going to be important. XLK. XLK struggling at the EMA 20 and EMA 8. So this is weaker than MAGS and weaker than SMH, maybe even weaker than communications. Yeah, communications is definitely doing a lot better. So it's going to be tough I think, for us to get really positive results out of, or at least positive stimulus out of their earnings. Unless the one thing the major thing that could push us upwards or even bring us downwards is NVIDIA. Right? So if NVIDIA is just dismal, then that'll drag down the MAGs. Right. So does it drag it all the way down to kind of this pullback bearish territory? The answer is no. Maybe at worst, I would imagine that it would maybe cause it to test the MA50. If the MAGs test the MA50, then the SPY will test the MA50. QQQ will test MA50. Maybe even it's so close on the QQQ that it might even break that MA50. So if NVIDIA is really negative, that could send us into a correction. But if they're super positive, then maybe it might maybe be able to give us a little bit more of a bull run over here. I'm not really seeing any other major catalysts this week. Today is the, over here, 25th. Jobless, GDP. Am I looking at two completely different? August 25th. August 25th. Was I looking at completely the wrong? Yeah, Thursday GDP. Thursday. Oh, GDP. Okay, there. Yeah, I don't think GDP is going to be a big deal with the rate cut basically already in place. So it's really going to be this one. Personal income outlays is going to be more. GDP will play a role, but personal income and outlays is going to play a bigger role. Let's see what they were projecting for GDP. Oh, a little bit higher. That's interesting. Okay. Yeah, I don't think we're going to get much stimulus off the GDP. So really, it looks sort of like last week, where we had really no real catalyst until Friday. So again, it just looks like we're probably going to get another choppy week in the S&P 500. All right, let's take a quick look at the sectors that did okay today. And the top performing sector didn't even go up that much. So yeah, there was a more negative tilt to the market than is implied by that small move downwards in the S&P 500. So mining, metals, some commodities, energy, XLC, uranium, those are the top. Same on the week, except for communications is here too. Pretty much the same. Interesting. Let me take a quick look at energies. We already looked at communications. Communications, I'm not going to get too excited about until it breaks above that high right there. So we'll have to see. And then energies, again, not so it has potential, but not yet. It's too early to get excited about this, right? We've got, I think I drew basically the same thing last week. Okay, this right here. So we're not above that yet. We could come just right back down. If we come back down, then cryptos will probably start going back into play. Because cryptos consume a lot of energy, but also because if energy is going up, that is an indication that the economy could be getting better and industry is picking up. In which case, portfolio managers would want exposure to that. And if they've been accumulating a bunch of cryptos, they would, and they don't have cash left over, then they would liquidate some of their cryptos in order to go into economic growth type of sectors. For example, energy or industrials would be two examples of that. Okay, let me take a quick look at XLI. XLI is actually looking pretty good. It's not, it just all-time high, completely consolidated right here. And then maybe just might start beginning to move. So again, this is another one where I'm going to be watching if it breaks above the previous all-time high. Right now, not yet. It's a little too early. I would want that confirmation of breaking out from this level over here, which was like 155, call it 155.15 or 25. If it breaks above that, then we'll be interested. Okay, that's pretty much all I'm seeing right now. Let's see. Okay, not seeing any other questions. We could go over. Actually, let's see if we can find. I mean, everything's so choppy. So again, I would focus more on neutral type of trades this week. Or what I would do is neutral to slightly bullish bias trade. So the best strategy to capture movement in this particular stage of the market where we're at would be verticals. Would be vertical call debit spreads or put credit spreads. So anything that you like, let's look for one. Let's look for one. Let me find my sector scan. Let's go over here. And I'm going to start looking at all stocks. I'll look specifically in the S&P 500. So let's say S&P 500 with weekly options. And then and S&P 500. I don't have that. Market is SP 500. Okay. Western Digital. Looking very good. So Western Digital. I might be able to just stop right there. Newmont Mining looking very good as well. Win broke out, so we might want to wait for that to pull back. All right, let's take a look at Newmont Mining and Western Digital. Newmont Mining's strong. That's interesting because gold is chopping sideways. Yeah, Newmont Mining is definitely on an uptrend. I think Barrick Mining I saw earlier was also, yeah. Miners are strong. That's interesting. Okay, so Newmont Mining. And then WDC. Okay, WDC moved a little too much today. It did break above this high right here. So I want to see if it runs or if it kind of pulls back or consolidates right here. So WDC, I would give it a couple more days, but that looks very, very good. Nice breakout right here. Newmont Mining. Yeah. So I would prefer to get in closer to that EMA 8 because we did gap up and just stay there today. So tomorrow, what I would look for is if we get closer to that EMA 8, then I would initiate a long debit call spread. And if we, let's take a look. Let's not keep it vague. Let me be very specific here. Okay, so I'd be comfortable trying for a week since it has weeklies. So either out to this Friday, by tomorrow will be Tuesday, Friday, probably I could get paid too much. So we'll go out one more week. And remember, I want a neutral to positive trade. So if I want neutral, that means if it chops sideways or if it pulls back down. So what's the box that it's trading in right now? It's this, right? So if it breaks above that box, looks like it could, then I want to make money. But even if it retraces to the bottom of the box, I also want to make money. So the bottom of that box is right about 67.5. The EMA 20, which is also right at the bottom of the box right now, is 67.55. So 67.5 looks like a good level. We don't have 67.5, so I have to choose either 67 or 68. More conservative would be 67. So let me try that for now. I'm going to buy a 66, 67 vertical. Oh, that's really wide. I was about to say if we can get it at 63 cents, that is an amazing deal. But this is really wide. These are really wide bid-ask spreads. So I would have to see during market hours if these tighten up. Because this one is pretty tight. 67 is very tight. 66 is terrible. And then 68 is terrible. But then 69 is good again. So that's really interesting. What's 65? 65 is terrible also. 67, 69. If we did a 67, 69, break even is above 68.57. Where's 68.57? That's not too bad. That is where the sideways chop is over here. It is below the EMA 8. It is below the lows of the last few days. I'm probably okay with that risk, but maybe other people are not. Okay, so I'm just talking me personally. I would be okay with this risk, assuming I get paid for it. So net debit $1.57, max profit 43. So 43 divided by $1.57, that's 27% in roughly a week and a half, which is okay. That's 2.7% per day, which is actually very good. Right, because if we annualize that, if we do, what is it, 2.7% per day times 3 or 255, no, we have to do 365 days. Okay, that's a little under 1,000% annualized. Which is basically just to say, if I could do this trade every 10 days and just keep on rolling it and just make that same 27% every 10 days, by the end of the year, I would have made nearly 1,000%. That's just what that calculation was. But that's no one's ever going to do that, right? You're never going to match perfectly every 10 days. You're going to get that same percentage. But it's just a measure, it's just a way of indexing yourself on how good. Because sometimes we look at these really small percentages and are like, why am I doing this? But you have to put it in context to see if it's worthwhile, worth putting your money into. Okay, so right now, what I want to do, if we have time, you can probably do it real quick, is I would want to do an equal move. So right now it's $71. So if we move $1, then at 72, I would make 27%. And then at 70, I would make 27%. Okay, at 70, okay. So if we go down to $70, $69, $68. Okay, so at 70, if I move a dollar up, I make 70 cents, or 27%. If I move a dollar down, I'm still above my break even. I still make 27%. At $69, if we move up, we make 27%. If we move down a dollar, then we lose 57. $57 on $1.57. Okay, minus 36%. Okay, so this is where my reward risk becomes against me, it's no longer in my favor. So basically we would want to stay above 69, which doesn't move this line all that much. Still okay. Okay, so this is what we do. Well, this is what I would do. I can't say, I can't tell you guys what to do, but this is what a trade that I like. You gotta be careful how I word things. Okay, so we break even at the purple line. We suffer max loss at the red line. We have max gain at $69. So as long as we stay at that line or above by next Friday, then we'll make the full 27%. If at any point in time the price pulls back to 69 or just below 69 in between now and then we close it out for a small loss. Okay, so that's my plan on this. So we can do this. I'll save this. Okay. And then to make it a little bit better in my favor, because what did I say? I said I prefer to have this on a pullback. So I'm not actually going to enter this trade as is. It's not going to be $1.57. I want it better than $1.57. So how am I going to estimate that? Where's that EMA 8? The EMA 8 is at 69.61. So if this can pull back to 69.75 or maybe 70, I don't want to be too nitpicky. If this can pull back to 70 tomorrow, then I will attempt to get in. So tomorrow, which is the 26th, if Newmont Mining goes down $1.09 down to 70, then the 67 is theoretically priced around 337. The 69 is theoretically priced at $1.97. 3.37 minus $1.97 is $1.40. So I'm going to put in my buy vertical 67.69. Put it on a spread at no more at a limit price of $1.40. So if we can get in at $1.40, then I'm okay with this. So I'll send that in, and then I just adjust this to 68.40. Okay, and then this becomes a little bit more favorable because I would lose 40 cents. I would lose 40 on a dollar. Where is it? Where's my option strat? What is 2 point? No, I need 15 more cents. Okay. So I'd lose $40 on $1.40. Okay, so 28%. So actually that actually makes a lot better. Okay, because now I could lose So 28.56%. Okay. So these two numbers are now very similar, right? So now, even if I had a 50-50% chance of winning, then overall, my expectancy is still positive at 69. Because these two percentages are so similar. So I like that trade a lot, actually, if we can get in at $1.40. If I can get in at $1.40. Okay. All right, any questions? Was that helpful? How I evaluate my verticals? I like the butterfly option you laid out before. Oh, you like the butterfly on? Yeah, so if we have a good target for NEM in 1 week, if we felt like we could pin it, then we could do a butterfly instead, like a wide mouth butterfly that would cover the same break-even point down here, and then an upper break-even point. Do I have time? I don't have enough time to look at a butterfly. Tomorrow we'll pick something and we'll look at a butterfly for it. Okay. Can I look? I can look at ADI real fast. Okay, ADI is too much too fast. So look at ATR is 6.5. This move right here was 14.43. Then we went up to, then we did 5.25 and then 2.79. It's a little too much, a little too fast. We've got a nice area of support right around here. So if it pulls back to here or close to his EMA 8, then that would be a good entry. I wouldn't chase ADI. Okay. All right, guys. That's it for today. Hope you guys have a rest of your evening. It goes really well. That you enjoy your rest of your evening, and I will see you guys tomorrow morning or tomorrow afternoon. All right. Bye, guys. See you later.